To the Marketing Brief Podcast. I am your host, Brian Aquan, and this is the podcast where we briefly touch on topics across the marketing landscape. As always, we're joined by an industry expert, and today we are very excited to be joined by Jason Fishman. Jason, welcome into the podcast.
Thanks, Brian. Love the show. Love your honesty and realism with your recommendations and discussion points. So it's been a big date on my calendar. I've been looking forward to it.
Would you like to introduce yourself to the podcast listeners, kind of talk about what you do?
Absolutely. So I run an investor and user acquisition agency. That's the marketing that we focus on, growth campaigns. Business since 2014. I've worked with coming up on 1,000 clients. Over 500 of those have been around capital raises. So we'll use advertising, outreach, content campaigns to effectively bring in investors for our clients and using digital tools and the scalability with those. Of course, we've worked on over 500 deals that have collectively produced hundreds of millions in capital, showcased a lot of the results on my podcast and our educational series, try to be an open book in terms of what we see working and not working in this space. Should mention, we go on to work on growth milestones, particularly if it's in between rounds. If a group, an issuer is going to be doing another investment opportunity, they need to be able to show more sales, more audience growth, more traction. So if they're looking to have a higher valuation, we could directly support in that process in between.
And your podcast, of course, we can mention it here, Test, Optimize, Scale, that you've been doing since 2020.
That's right. That's my approach, my philosophy towards growth. Summarized in 3 words. I've done over 230 episodes. A lot of our clients on there, strategic partners, other marketers, people I find fascinating. I love it. I want to do it forever.
Episodes.
I feel
like
you're
like
from every episode.
30 for us. So we're trailing you, but we're going to catch you.
Yeah. 30 is a big mark. I think it's 5% of podcasters that ever get to 30. I'll also tell you'll get hit up by the booking services at about 30, 35. Yeah, it'll just become more and more.
And you're the second interview on season 2. So welcome to season 2 of the Marketing Brief Podcast. Well, I love that you're in the investing space. I think I want to start there kind of at the 10,000 foot level because obviously we've seen a lot of VC money dry up, investing's in a different place in 2026. How have you seen things change for your business in the last couple of years or this year?
Sure. I got involved in the space because companies fail if they're undercapitalized. If their revenue, isn't supporting their growth and being able to compete in their vertical, they're done. There's horrible stats around it at that. And founders, CEOs are generally limited by their first degree networks. So with marketing could go well beyond that. We've built databases of historical investors for these types of deals, see stronger performance as a result, can bring investors. Some of them have over 100 of these types of deals in their portfolio. So they're going to be approaching it differently than someone who doesn't understand what investing online in private companies really consists of. And I've definitely seen it change over the years from, a heavy informational process on how these filings work and the SEC approvals and everything around it. It picked up dramatically in the what's called the rise of the Robinhood investor back in 2020. And it showed up and the industry grew and attracted more investors, a lot of issuers, larger companies who said, hey, I have millions of people in our audience database. If we launch one of these deals, maybe they could invest and become shareholders alongside us. Those companies, millions of customers at that who love what they do and are then owners alongside them. There's been periods where, a lot more investments are occurring. There's been news cycles that have affected, called investor appetite at different points as well. Not across all deals, but some of them get dramatically impacted. I've seen a lot more med tech, health tech, biotech companies use these platforms over the past year. And I've heard notes from those founders of, offline capital, VCs, it's really dried up over the past year. They're not the only vertical where that's occurred. Money can be harder to get. And, there's 3 types of filings, primary filings. One's for accredited investors only. And that's more of the traditional angel VC route, maybe $50K, $150K, $1 million type investments. The issuer gets to set the minimum, and I could tell you what the average investment would likely be based on that minimum and experience around this. You then have Reg CF and Regulation A+, which is high volumes of these small investments. Average investment on a CF in quarter 1 was $1,800.
Right.
So it means you need a lot of conversion. Every 1,000 conversions, some repeat conversions from the same individuals there, you $1.8 million. Got to do a pretty serious marketing campaign, maybe 50,000, 100,000 visits to an offering page to make that occur. But it's a lot easier to ask somebody for a few hundred, a few $1,000s than it is to have them come in for a few 100,000. So less reservation, the numbers. I'll tell you, the issuers get a lot more value than just the capital. The marketing campaigns basically added value at that point with a high return on advertising spend, a high marketing efficiency ratio. But they're getting, just imagine 1,000 people investing in you. You're going to have some strategic partnerships emerge. Publishers, I've seen merger and acquisition activity, enterprise opportunity, all different types of things come out of it. So more groups gravitating towards this because of less active marketplaces. And I'll tell you, more repeat issuers, operators, if you will, people who understand how to do this. They've done it effectively. They've gone from Reg CF, where you can raise up to 5 million, to Regulation A+, where you can raise up to 75 million. They're investing heavily into the advertising, seeing great returns, but even having business units, teams inside their company just to facilitate the success.
I like that you're speaking to the value of it, right? Because if you do get 1,000 investors, 10 to 20,000 people have been exposed to what you're trying to do, right? Which is now coming as added value from your offering. It kind of sounds like you've unlocked the long tail of investing. Is that kind of what you've done? I oversimplify things.
It's approached. Yes. Yeah. I don't want to oversimplify the yes there, but to a degree, and one that works for many companies, there's a formula that could be very productive for them. It's not to say every company should do it, and if they could get funded by one strategic investor offline, they should go down this route. But I would tell you, founders I work with, they've told me the valuations they're able to get here are very favorable in comparison to aggressive VC negotiations they've had. They feel less concerns around losing control and, some of the other things that come along with accepting VC capital. Yeah. So I don't want to say one's better than the other, but I could tell you a lot of companies who are stuck are definitely benefiting from that long tail approach.
Another oversimplification, but when I think about investing teams, they're typically looking for you to identify, a market opportunity, how you're going to fit that market opportunity, and who's the team that's going to bring you that, right? And again, I oversimplify everything, but what's the nuance in there that you find investors are looking for, right? Your consumers, the investors you're essentially reaching. Is there nuance in between kind of that line there?
Sure. I could speak about some differentiators on successful campaigns, both online and offline. But what you're pointing to is essential. It's generally an offering page. I look at it as a vertical pitch deck that speaks to all of those fundamental points, right? The problem, the solution, the team, the product, the market. You could actually say more forward-looking statements about the market than you can for your company. For Reg CF, Regulation A+ is a little bit different. They all have their own nuances towards them. But I would tell you it's then layering digital marketing best practices, landing page, conversion rate optimization principles. So you want to have as much social proof and third-party validation as possible. You wouldn't necessarily do that in a pitch deck where every other page is another validator. Maybe, but on an offering page, I absolutely would, as featured by investor testimonials, what our investors are saying, publisher features. There's an update section. You want to have a headline-worthy announcement on a weekly basis. It's all about that engagement. It's all about that ongoing conversation, as you say in your content here. It is not the first touch point that someone gets to one of these offering pages. He's let's call it Shark Tank style pitch video for 2.5 minutes, scrolls down a page and says, yeah, let me put my social security number in here. Let me, put thousands of dollars in. Cool. Signed up. It's 17. I was looking at a deal last week and it's got advanced analytics around. There's 43 different touch points and I could see the email newsletter and different publisher placements and different ads and different providers of those ads. So it is more of that journey because it's not just that first, financial transaction as much as they need to keep an eye on it. They need to be able to see if there's going to be a liquidity event, some type of exit strategy that they should be on the lookout for. They have to really consider it and how it fits into their life.
I love how you're taking the best practices from e-commerce growth engines and bringing that here. and honest, and it makes sense, right? Some of the nuance would be like, what's historically worked, right? How do you prove this out to me, right? Which is also what consumers are looking for when they're trying to make a purchase. So there's a lot of parallels there. I like that you also make the point that, you don't just land on a page and click yes. Because I think a lot of marketers get caught up in that and they're like, why is my conversion rate down? Right. And you're like, that's a symptom. um, but we always talk about, like, you have to warm up audiences, right? You've got to introduce something to them. You've got to let them know you're speaking in their language. You understand their challenge. So it sounds like you're going through a number of those touch points before delivering someone to that final offer sheet. Yeah,
absolutely. People are skeptical.
Increasingly
on what they
so.
see online, particularly around an investment opportunity. Yeah, they're not going to potentially even believe it the first time that they get there. And if you're able to show them with the public amounts raised of how many investors are in the deal, we talked about 1,000. We're working with a client, an issuer, Mode Mobile. They have over 59,000 investors, over 63 million raised. So that speaks very loudly. Where if you get to a page and there's no investors, or less than 100 and less than 100K, less than 200K raised, it says something differently. It's the crowd effect that you're playing for here. They want to be in that line around the block. They don't want to be in an empty restaurant and have that sensation. They may not even know what they're waiting for in that line around the block. They may not even be familiar with the product at that restaurant, but say, I want to go there. I want to check that out. That looks good. So it is those social dynamics that you're really shooting for. And then if you could layer in immediacy, that fear of missing out. Some of the Regulation A plus issuers do it by share price increases and dates on when that occurs. There can be perks across these filings. You put in this amount, that amount, you invest in this time, that time, you get bonus shares, you get other things involved. So you don't have to wait for the closing, which is often when there's the biggest spike, if a campaign hasn't hit its goal by that time. But you want to do something that creates that immediacy, that action.
That's awesome. Well, I'd love to ask all my guests one question. And season 2, our question has gone to, what is your superpower? Do you know what your superpower is, Jason?
Getting people excited. I have to use it for the right purposes. I've been notorious with friends about talking them into snowboard trips and with extensive travel. And, I have to make sure I'm applying it towards the right things, productive, healthy things at that. But being able to apply that to marketing, copy, creative, visuals, videos, even just the strategy discussions we're having with clients, I would say that's something that I'm very passionate about and have received very good responses around. So I'd love to say it was like golf and I play in the 60s every time or something like that. But I think getting people excited is very powerful.
And you're using your powers
you apply it.
That's great. Well, that's awesome. I've really enjoyed talking to you. How do people get in touch with you if they're interested in DNA, if they're interested in listening to the podcast? What's the best way to get in touch with you?
Absolutely. Brian, love speaking with you as well, too. I could see why your audience tunes into every episode here. You could check us out at digitalnicheagency.com. That's what DNA stands for. YouTube.com/@digitalnicheagency. You can see our podcast playlist, our webinar series, guest appearances, any audio channel as well.
Nice. That's awesome. Well, I've really enjoyed this conversation. Thank you for being a guest today. This has been a brief conversation with Jason Fishman. I'm your host, Brian Aquan, and stay curious, everyone.